Klima has spent the last 2 decades building something most investors only talk about: a real estate portfolio that generates consistent returns while scaling strategically. With nearly 800 residential units under management and a portfolio valued at just under $60 million, Klima has established himself as a disciplined operator in the affordable workforce housing sector. His approach is straightforward: find underperforming properties, improve them through hands-on redevelopment, and hold them for long-term cash flow. It's a strategy that has produced tangible results, including a recent project that created over $1.5 million in equity in less than a year. Klima's entrepreneurial foundation was built in a completely different industry. After studying finance at Fordham University, he entered the automotive business alongside his father, co-founding KDK Auto Brokers. The dealership quickly became one of the top-performing independent operations in its region, teaching Klima the fundamentals of operational efficiency and scalable growth. Those lessons translated directly into real estate. The discipline required to run a high-volume dealership, the attention to operational metrics, and the ability to identify opportunities in competitive markets all became assets when Klima shifted his focus to property investment and management. While Klima had been involved in real estate for over 20 years through property management and development work, 2017 marked a turning point in his strategy. Rather than pursuing short-term flips, he committed to a model centered on acquisition, redevelopment, and long-term holds. This shift allowed PJK Holdings, LLC to focus on value-add opportunities where operational improvements and capital investments could unlock significant upside. The company targets properties that are distressed or underperforming, particularly in the affordable housing segment where demand remains strong and barriers to entry favor experienced operators. The numbers tell part of the story. Klima currently manages a portfolio spanning single-family homes, small multifamily properties, and large apartment complexes totaling nearly 800 units. The portfolio's $60 million valuation reflects both organic growth and the successful execution of value-add projects across multiple markets. One example illustrates Klima's approach. In 2023, PJK Holdings acquired a vacant 46-unit apartment building. Within a year, the property was fully renovated, leased at market rates, and generating significant returns. The project created over $1.5 million in equity, demonstrating the potential of well-executed redevelopment in the right markets. That project wasn't an outlier. Klima is currently managing multiple value-add initiatives in the Southeast, with a particular focus on properties in the 150 to 300 unit range. One major ongoing project involves a 192-unit portfolio in Mississippi that is expected to generate approximately $7 million in value upon completion. PJK Holdings operates differently than many real estate investment firms. Rather than outsourcing property management and construction, Klima has built a vertically integrated operation with in-house teams handling both functions. This structure provides several advantages. Direct control over renovations means faster timelines and better cost management. In-house property management allows for immediate response to operational issues and more consistent execution of leasing strategies. The model also creates a feedback loop where lessons learned on one project immediately inform decisions on the next. For investors focused on value-add strategies, this level of operational control matters. The difference between a project that generates strong returns and one that underperforms often comes down to execution quality. Having trusted teams in place reduces risk and improves outcomes. Klima's investment thesis centers on affordable workforce housing, a segment that has proven resilient across economic cycles. These properties serve essential workers who need quality housing at accessible price points, creating stable demand even during market downturns. The strategy also aligns with a broader market need. As housing costs have increased across most major markets, the gap between luxury developments and truly affordable options has widened. Properties that serve the middle market, particularly those that can be improved through thoughtful renovation and management, represent opportunities for investors who understand the segment. PJK Holdings targets properties where the fundamentals are sound but performance has slipped due to deferred maintenance, poor management, or market conditions. These assets can often be acquired at discounts to replacement cost, providing a margin of safety while offering clear paths to value creation. Klima's current focus remains on the Southeast, where population growth and job creation continue to drive housing demand. The 192-unit Mississippi portfolio represents the scale of projects he is pursuing, large enough to generate meaningful returns but manageable enough to execute efficiently with his existing team. The expected $7 million in value creation from that project alone demonstrates the potential of the strategy at scale. As PJK Holdings continues to grow, Klima has maintained a focus on properties in the 150 to 300 unit range, a size that balances impact with operational complexity. What sets Klima apart in a market filled with short-term traders and speculative investors is his commitment to holding assets long-term. While the value-add model creates equity through improvements, the real wealth builds through sustained cash flow and appreciation over time. This approach requires patience and operational excellence. Properties must be managed well enough to maintain occupancy and rent growth. Capital improvements must be planned strategically to preserve value without overcapitalizing. And market selection matters, as long-term holds amplify both positive and negative market trends. For Klima, the combination of automotive industry discipline, real estate expertise, and a focus on execution has produced a portfolio that continues to expand. With nearly 800 units in operation, multiple projects in development, and a clear investment thesis guiding decisions, PJK Holdings represents what systematic value-add investing can achieve when executed consistently over time. The results speak for themselves: a $60 million portfolio built through strategic acquisitions, hands-on redevelopment, and disciplined operations. As Klima continues to pursue opportunities in the Southeast, his track record provides a blueprint for investors looking to build wealth through multifamily real estate.